Okay, let's talk about our markets. Taher Badshah, Senior VP and Co-Head of Equities at Motilal Oswal Asset Management, joins us right now on the show. Taher, good having you. Thanks much for joining in. Banks seem to be the center stage in terms of either the trading action or the talk. What with the results also around the corner? What do you think is the case here with the correction in banks? You think in the PSUs it's overdone? I mean, stocks like IOB are available at 0.4, 0.5 times book. Is it a good time to look into them or stay away from them?
I think the conditions are reasonably volatile, and so while from a valuation perspective they do merit attention, but near term it's clearly going to remain pretty difficult to fathom the direction, because on the one hand we had a little bit of the government noise yesterday about the changes in provisioning norms. Plus the push by the government to control lending rates. So that's not something which is getting very well received by the market, unless of course the government supports it by easing certain other liquidity conditions in the environment, such as CRR or SLR. So we'll have to in the very near term, yes, it's going to be a little dynamic and pretty volatile even for the PSU banks. But from a more medium to long term perspective, I think some of these could merit attention simply based on the valuation comfort.
Taher, afternoon. What's your view on the way the depreciation of the currency is playing out on the IT stocks, and do you think that it is a material beneficiary and can perhaps offset the overhang of the US immigration bill?
Yes, it's possible, and especially if the currency benefit to the IT companies comes along with an improvement in the global IT demand environment as well. And if that were to be the case, so you may probably see, along with the gradual improvement that you're seeing in the US economy, IT spends in the near term probably should start looking up, and more of the discretionary spends should come in a few quarters down the line. So if that were to happen, then clearly I think IT stocks will benefit, led by both operational as well as the currency benefit, and probably should be reasonably sufficient to offset some of the downside with regard to visa costs, or probably the immigration laws changing out there. So I think we are reasonably positive on the IT sector going forward.
What's the call then coming in on individual stocks from the real estate basket? Because it has been a fairly volatile journey of late, but we just spoke about yesterday about how DLF's debt woes have absolutely not receded. Do you think same is the case for some of the other companies, and that while we might see an improvement in the overall interest rate environment, fundamentally nothing really changes?
Yeah, I think it's a little disappointing that things didn't pan out the way one expected it to as far as DLF went in terms of being able to restructure their balance sheet efforts. So that's clearly something which is now becoming a little more painful for this sector once again, especially with the rupee at 60 to the dollar. So it's not really going to go away anytime soon. But I think many of the other real estate firms are pretty okay in terms of the leverage now compared to what they were about 2-3 years ago, having downsized operations, having cut down on new launches compared to the intensity a couple of years ago. So it's not a complete disaster, but yes, it's going to be a pain specific to certain companies.
A sector, Taher, that has just not wavered in light of the recent volatility that we've seen would undoubtedly be the pharma pack. Could you highlight for us 2 or 3 stocks that you think people can bet on for the long term?
Well, I don't know whether I'll be able to spell out specific names, but clearly that's a sector where we are more focused on the companies which are more domestic oriented, and where we see a comfort on valuation. We see ability to grow top line at about 20% coming about more easily to them compared to the others. So and some of these names are between the large and the mid cap space. So I think we have specific opportunities in the pharma sector which can do well, as the likes of DVs and Epca Laboratories and all that also make sense at current levels.
Fair call. Taher, the other set of stocks would be the IT pack, and the results start coming out from next week, which is Friday, where Infy comes in. What happens, do you think, this quarter? I mean, HCL Tech, TCS, I mean, without getting into specific names, but do you think some of the companies capture the rupee benefits this quarter, or will it largely be the volume-led growth that we'll see from a couple of companies?
So you will probably not see much of the rupee-related benefit flow into this quarter. It will probably be more in the current quarter starting July. So I think the trajectory of growth in the IT sector as a whole will probably not be very different from what you had in the March quarter. So I don't really think we will probably be in for some significant change in the earnings growth. We'll probably see dollar revenue growth in the vicinity of around 3 to 4% QOQ in this quarter at best.
What's the view coming in on the cement pack? Do you believe that the capacity addition by some of the mid-tier companies as well as the overall muted demand outlook is going to play havoc in Q1 for some of the frontliners?
Yeah, I think at least the trends of the last quarter, both in terms of prices as well as in terms of offtake, have not really been too good. So clearly, I think one would not probably be expecting very good numbers from the cement sector as a pack.
And what about metals? Would you remain cautious?
Yeah, until we don't really have a great positioning nor a view in the metal sector as such from a portfolio standpoint. But I would presume that till the time you see some more action out of some of the emerging markets, especially China and perhaps even to some extent India, we are not going to see as much of demand pickup as far as metal commodities go, and that should probably also reflect itself on weaker stock prices in that sector.
Clearly, the government has done its bit when it comes to stepping up the gas and pushing for reforms in the oil and gas sector. Tactically, do you think it makes sense for someone to put their money into the Reliances and ONGCs of the world?
I would think so. I mean, this is one of the sectors which will probably perform both driven by the current pace of reforms, of course, the domestic fuel prices, the recently announced gas prices, plus some of them happen to be beneficiaries of the rupee as well. So clearly, both in the private sector side as well as on the in a couple of the PSU names, I think one should see better performance out of the oil and gas space. So clearly, that's a sector which again merits attention from a medium to long term perspective.
All right, Taher, we'll leave it at that. Thanks so much. Always appreciate you taking the time out and joining us on Market Sense. Look forward to have you more often on the show. That's Taher Badshah of Motilal Oswal. Okay, before we get into global view, Prakash.